Welcome to TradeTheMBI.com. This is John. This report is for December 24th. My girls are all excited. They're looking for Santa's sleigh, and we had quite an exciting little Friday for the market. Things went, I want to say, actually fairly well. Now, we do end up with a very interesting setup here. Number 215, green dot, okay, coming right after this setup. Now, if that looks familiar to you, let's roll over here. Red dot, then number 214. That one happened to be with a dip below the red line and a bit of a difference here, because if we take a look at our expanded ratio histogram, notice the yellow line above the orange, and what that is a reflection of who was a bit stronger at that point, and this led to a ratio psi, pretty significant short signal. We were looking for somewhere between 80 and 100 points in general off that kind of a decline. If we had the yellow above, I would have us very cautious. We'd be looking to buy puts for a lot of the stuff, but with the orange above, it changes things dramatically. And so we have far less bearish view of it, and if we look at our MBI Opus, which we'll go over in just a little bit, even becomes more of a positive. So interesting. Would have liked to have seen a little bit further dip, and we're probably likely to see a little bit more action to the downside, but if we do see that initial gap up in the morning for Monday, then you're likely to see a continuation of that move, and we will break out to new highs from this range and most likely take out that previous one. So I put the odds at somewhere better than 70%, so that's fairly decent. Nothing too spectacular with the price oscillator. Momentum was coming up. We still couldn't quite get that even 20-20 like right here, where they both climb together, and then it gives you that nice move. So we've had a little bit of sporadic behavior, and still no changes from those up-down ranges. And we've kind of pretty much as it's stayed in this gap. You can see price has stayed within that gap as well. So the computer's been fairly accurate at reading what's going on inside of there. We moved in between a bunch of different support resistance zones, but pretty much holding in the same pattern. For those playing Bollinger stuff, we dip below the line. That tells them that they should think that price should go back to the bottom, but then it closed back above. And who knows what they're going to read from that, and you're still below your 13 EMA. When we look at our up-down power, shorts had really piled into the overall setup, and what you ended up with was shorts piling in, but just fewer buyers. And so this is one I will be taking a look at in the next day or two to come, because it's going to be critical that the white here for bulls stays positive. If we dip to negative, then I would expect a much more exacerbated downturn. From our SSO standpoint, you know what I didn't put? Let me pause 1 second and get up the website. Okay, Video Magic allows me to click over, and we can go to, let's just go to our portfolio hedge setup. I won't click SSO because I know we did that little simple sell of a put at the 60 level because we wanted to take advantage of just a small return. And I mean, it's not a whole lot of money, but it wasn't the point. Is that if we got the full dip, that we wanted to go ahead and have the shares put to us, and we felt that we would get the decent discount. But now a little bit more aggressive, given that green dot setup there. We want to sell 4 of the 60 puts for around 75 cents for the current week to end things out. We may actually even buy shares if we get any of a little bit more of a correction into the setup, and we still have the positive readings from a daily standpoint, so I want to keep that one in mind. USO, we had sold the 32 calls. Let's take a look at that. This worked out just beautifully for us. We sold the 32 calls. We had a fairly decent cost basis. I don't know why that's taking a little while to load up, but anyway, we'll talk about this. We had 900 shares, and what we wanted to do was sell calls on 600 of them, so 6 contracts, and we got 39 cents. The fact that it ended at 36 means that we actually ended up on the positive side of that. And we want to still sell the remaining 300 shares we have left for 62 cents. because it's in the money. So we end up closing out the 600 shares right here. It'll be reflected there. It'll also show up in our portfolio summary. In fact, you know what? We can go ahead and take a look at the portfolio summary because it's been updated as well. So we're finally over that 60% for the year, and in just a week, that's going to start back at the same 100 level. So it'll be like a redo. I know. Seemed kind of bummer at that point, but every year we reset that anyway. So S&P balance, the current stocks where we're at with these setups, and then what we closed out. We had closed out some CLF as well, and had already closed out the X portion of things. So all in all, not too shabby for this month. Actually, we're doing quite nicely. When we do look at CLF, we do also. I believe I have a trade for CLF. Let's take a look at. Just go back right here. Okay, CLF. So we're down to 300 shares there. What we want to turn around for CLF and sell 34 weekly puts for 32 cents. So that's not. Being too aggressive, and the reason being is don't have quite the same readings on CLF that we do for our overall market. And that particular setup for X, let's plop it up here. Just click US Steel. For X, what we want to do is sell 3 of the 23 puts. They're going for about 19 cents overall. It's kind of modest, but again, it's also while positive, we still have to look at the fact that we have this positive extreme that we may get a little bit more of a retrace into it. So we'll play that as now WLT. We got a little bit more aggressive. Let's take a look at WLT because we have a bunch of different things to do there. And basically, we had. Well, let's take a look at overall what we're looking at. We decided to get out when we were up here. We sold the calls, came down, we had the green, we had a little bit of weakness into it, and then we wanted to sell puts into that to get some shares. So we got put those shares, and if we go back now to the stock, we can see that we got long 300 shares, 34.52 because we got 48 cents for the put. So fine, we own those shares. If you didn't sell the put, you could have just bought the shares. You could have even got them cheaper at that particular point, knowing where we were with the put. But now we want to sell 3 more at the 35 strike, and we want to try and get about $1.50, somewhere in that range. And then also we had talked about selling the 32.50s if price got below 35, and it did. So for those, we got about 48 cents. So really looking to get back to a full position, and we'll be split in between. I don't care if we get put any of these or if we don't get put any of the shares. If you do get a dip and you're not selling puts, then that would be the time to go ahead and jump on it because it's very positive. We dipped down. We could still see a little bit more of a decline from it. Not too concerned about it. We dipped below the extreme histogram here on the cyan, but above the red. Maybe we get a little draft down to the red. It's hard to say at this particular point, but just like the daily market, that's positive from that setup. So kind of aggressive considering how many negatives most people see in the market at this particular point. Even GLD popped up above the negative 60 line there. Might still need to retrace that. But, negative 26 in that shakeout's just a little ugly. So from our ES, we're not going to do an ES yet, but we're very close to it because let me flip over to this one, and we can take a look at that ES when we were talking about this, and I got put into those shares with the Starhawk setup, but we end up with an Ironhawk buy signal at the end there. So if I can get a little bit more of a retrace, considering we're dipped below there, we're going to jump on that with futures, and so maybe before the year ends, we won't know until after Christmas, and I'll probably be able to do an early report for us on Christmas Eve, and that will be a nice way to end the year if we're able to get that additional ES, because and you can expect that it would be a full position. But I do want to see some improvement in my power mo in this relationship. I want to see my cyan color moving back above the yellow in this particular case. So a couple of things to watch for. We still do have that potential for the ratio hawk, not the ratio psi from the daily standpoint, which we should know pretty quick, because if we get a positive reaction on Christmas Eve, then it looks pretty good for the upside. But if we see some continuation of the downside red and or no improvement from my extreme, then we may end up taking some more defensive plays by actually buying some puts to counter the fact that we've sold some. But overall, it's an interesting call, because at this particular point, I think most people have kind of flipped to a more negative stance, but that's emotional and not really going to worry about trading that. You can see that from the ES standpoint. Look at that huge bar to the downside and pretty much counteracted. And this is very unusual from a pattern standpoint. Let me just I always do that. I should just grab down below, and I always try and grab price. But if I move away, let me get rid of the ABM real quick so you can get an idea. This pattern is typical when you have the red dot within 3 days, but normally this bar ends at the bottom. And the fact that it didn't end at the bottom is really kind of surprising, and I would say that's an extraordinary bullish setup, given the fact that normally when we get these green signals, you'll notice that they're usually full down bars, and that's because these guys like to buy at the bottom end of the tick. But what happened was it went so far with this in clearing the stops that they were started buying even earlier, and we knew that this was coming in place when I was doing the other report, and I actually got filled to the ES long side. And that points out we were also doing, if we go back to the regular homepage, on the member portfolio page, I put down this HTML for our live events, and what that does is just takes you to where I was doing some of the live broadcasts. But if you miss anything, you can always go to the library here. It has the video feeds, and so because it was going to be such a light day, I went ahead and did quite a few of them. I even talked about some of the inputs for some of the automated strategies. So for instance, when we look at this Iron Hawk, some people say to me, well, what's that? Well, if we go to our format strategies and we look at the MBI Opus, we can go to format, and these are all the different setups. And so we can see what an Iron Hawk in the particular setup is, and you can scroll through, and each of these values, now these you can optimize and make some adjustments to, but overall they're still not going to change what the base of the indicator is. So this just allows some customizing, particularly helpful when we're talking about individual stocks and that, because they all have their own little different patterns, and providing that little bit of flexibility to the overall setup lets you make those kinds of adjustments. But overall, even with that loss, we looked at the performance report on this, and it was fairly decent. 78% win rate. I know we were looking at the overall full Opus that we utilize is at 83%. But we've had some significant overall down move, and now that we have the pop back up, these tend to trade in these extreme conditions where most people look at their indicators and say, oh, but everything's so overbought and everything like that. And that's where it becomes a unique little opportunity. It was very powerful at the start of the year. If we go all the way back, scrolling, we can look at some of these. Had an extraordinary number of them at the early part where, significant green trend, positive extremes, and there are opportunities to take advantage of those kind of setups. So if we get a little more weakness, particularly since this was such a significant bar on an option expiration Friday, a lot of people get frightened by those kinds of things. I see them as opportunities, because what we've done now is we've just increased our ATR, the average true range, which means that, like on the dot alerts, oh my God, what a great overall week. In fact, I was going to do a little screencast. Here was the SPY, and I know there were a bunch of people who got SPY for the dot alerts, and so just plenty of solid signals. And then when it was in red trend, easy to have trailed a lot of these little ones lower by middle week, but then final day, all the signals, boom, to the upside. Even Apple for the week was phenomenal from a 10-minute standpoint, whether it was long or short signals. Just quickly scrolling through here, you can see that when you get into those red trends, I mean, this becomes valuable as far as looking for those discounts and being able to trail it lower. But you're never going to have 100%, but it's okay because, well, there was 100% for Friday. You ended up with green dot 10 minute, and even if you had trailed that a little bit lower by the time you got filled into it, still ended up nearly taking out the full height of that target. So that was like a complete dream come true. And in a tough period, and this is what I was telling people in that live chat, you have to pay attention to a daily version of whatever it is you're looking at to trade. And I point this out even for those of you that have the indicators and stuff. You want to be looking at this because, okay, I know that from my minus 25 of my shakeout, I don't have a whole lot of support underneath. So do I want to be trading my 78-minute chart as much as I want to be trading a short time? No, you want to be trading the short time because you know that the potential for, longer term weakness is still there. So that's where your 10, 15, and you're kind of pushing a little bit at going up to the 30 become more attractive to trade rather than trying to trade the 78-minute, because that's going to be just a little bit tougher, because you might get into a position and this daily is suggesting that you get the potential of retracing a much further distance. So this is where you have to utilize your different time frames effectively, and having the indicators helps because at least at that point you're able to look at the broader scope. And I offered that nice opportunity for everyone to get all the dot alerts for the entire week. So through the end of the year, so people are going to be getting an opportunity to see them. And another option was also that TradeStation now is offering 60 days to try out the platform. And that I have to look at that offer a little more closely and see what it entails, but I've always made it clear that someone wants to try out the indicators for a few days to see if they can, if it works with their trading plan and their idea. Absolutely, because it becomes powerful if you're going to trade individual stocks. Because we're not going to have anything high priced in our portfolio simply because of the low amount we're starting with, and it's an opportunity for a lot of people to just get used to trading, and they don't have to be active. But if you're a much more active trader, having the indicators, this is the only way to go if you want to really be effective and utilize some of these programs. But everyone, I know that I'll be putting out one briefly for Christmas Eve, but be safe, have a happy holiday, and we'll talk again soon. You can continue to look for me on StockTwits and Twitter. Trade well.